Hello and welcome to the Weekly Market Metrics. I'm your host Sandeep Rao and we are in week 18 of 2026. This was another eventful week. Now, politically speaking, the voting for the 2026 Assembly elections concluded yesterday with May 4 now looming as a volatility catalyst for the markets. While much of India continues to remain gripped by a severe El Nino heat wave, Bangalore saw a record-breaking 111 mm rain yesterday. This week also marked the passing of the Grand Master of Indian photography Raghu Rai. And on the global stage, we witnessed Sebastian Coe setting a new record running a sub-2-hour marathon. Now, in the financial world, the Fed opted for stability, holding interest rates constant at 3.5% despite high anticipation. In our markets, the Hormuz premium and election uncertainty triggered a pause in the recent rally. With crude oil hovering above $100 and the exit poll ban about to lift, it's clear that we are entering an uncertain window for both policy and price action. Anyways, let's dive into the specifics of what moved the needle last week and what we are watching for in the week ahead. Let's get to our usual market metrics, starting with the rate of change across indexes. Well, this was a muted week across NIFTY, SENSEX and mid-cap NIFTY as all three saw roughly a 0.5% increase this week. BANKNIFTY, however, saw a 2.19% drop. Last week, BANKNIFTY showed relative strength, but this week it's exactly the opposite. It was relatively weaker. For the month of April, all four indexes are in the green, with mid-cap NIFTY gaining 14%, Bank NIFTY gaining 9%, NIFTY at 7.5% and SENSEX at 7%. On a YTD basis, only mid-cap NIFTY remains in green. The other three are still in the red, with SENSEX losing close to 10%, while Bank NIFTY and NIFTY are both down around 8%. Now, since this is a month end, let's talk about monthly seasonality for NIFTY. April 2026 finished in the green with a positive 7.46% gains. After a treacherous month of March, this recovery was much needed. While I must say that April didn't move in a straight line and it did have its own fair share of volatility. To give you some context, March's range was around 2,700 points, while April's range came in at roughly 2,400 points. Looking at the upcoming month of May, as per the previous 26 years of data, 14 times May ended in positive, so it's just about a coin toss type of probability. So with so much of geopolitical uncertainty around us, it's tough to predict how May will perform. So I will save everyone's time by not predicting anything and just giving you all the data to draw your own conclusions. Now let's look at NIFTY on various timeframes, starting with the weekly timeframe. In the last week of April 2026, NIFTY gained 100 points or 0.42% to close at 23,997. It was a pretty muted move and the entire weekly candle almost sat inside the previous week's candle. The weekly range was 538 points compared to 788 points last week. But mind you, it was just a 4-day week. This week, Thursday's range was the highest at 291 points. On the daily time frame, we saw 2 green days, Monday and Wednesday, and 2 red days, Tuesday and Thursday. Thursday's price action was the toughest. The index opened with a 180-point gap down and fell over 200 points from the open, only to recover the entire intraday fall. It was also a SENSEX 0DT, which we will discuss just in a while. NIFTY is now trading just about 21-day EMA, but it remains below all other major daily moving averages, including the 200-day SMA as well as the 100 and 50 EMAs. On the hourly time frame, the classic chop is happening for the short-term trend followers. After a very good March for trend following, April was not that smooth. For the week, NIFTY chopped around the 50 EMA on the hourly time frame and closed just below it. With a long weekend ahead, nobody knows what will happen on the Monday at open. We can only control things which are in our hands, like proper position sizing and not over leveraging. Rest, what happens, is way beyond our control and no one can predict it. And that's why we shouldn't be spoiling our long weekend worrying about gap up or gap down or any of that. Now back to markets and talking about Nifty's monthly expiry, which happened on Tuesday, 28th of April. The expiry had a range of 221 points, lower from last week's 247 points. The index gave a 180-point move in the first hour and then from there went down 220 points until 1:30 p.m. All this with an at-the-money straddle premium of just about 116 points. Now it was a relatively tough expiry for option writers given there was not much of a premium to begin with. Moving on to SENSEX and starting with the weekly time frame. Similar to Nifty, the SENSEX weekly candle also made a doji, gaining 250 points or 0.33%. The weekly range for SENSEX came in at 1700 odd points, which was way lower than last week's range of 2900 points. On the daily time frame, SENSEX broke last week's low just like Nifty did, but could not sustain below it, and at the end of the day it recovered 650 points from the low made on Thursday to close at 76,914. Monday gave a positive of 0.75%, Tuesday was down 0.54%, Wednesday up again 0.79%, and Thursday down again at 0.75%. None of the days gave even a 1% move, but intraday volatility was through the roof, especially on Thursday with an almost 1,000-point daily range. Talking about the SENSEX monthly expiry, which happened on Thursday, 30th April, well, the index opened around 583 points, that is 0.75% gap down, and lost another 982 points before 11 a.m. before bouncing 1,000 points until 2:45 p.m. Then there was another 450-point down move followed by a 350-point up move. You know what that means. Such was the volatility on SENSEX on its monthly expiry day. The ATM straddle opened at a mere 375 points, but the premiums were jumpy throughout the day. Both the expiries were extremely difficult for option writers, and if you did not lose much, consider that a big win. Moving on to BANKNIFTY on the weekly time frame. Well, BANKNIFTY lost 1,226 points or 2.19% for the week, closing at 54,863. Previous week's red candle looked like a minor pullback, but since we got a follow through on the downside this week, the directional bias is clearly bearish for BANKNIFTY. The weekly range expanded from last week's approximately 1,700 to 2,000 this week, even though this week was just a 4-day trading week. On the daily time frame, BANKNIFTY made two 1% candles on a close-to-close basis, Tuesday with minus 1.54% and Thursday with minus 0.98%. The other 2 days, Monday and Wednesday, saw gains of 0.31% and 0.01%. Now, relatively speaking, BANKNIFTY is weaker compared to Nifty, but the silver lining is that it is right at the support of 54,350. We will have to wait and watch what it does next. On the hourly time frame, BANKNIFTY stayed well below the 50 EMA for most of the week, with Wednesday touching the EMA for only a brief time. For April, BANKNIFTY gave clearer trends than Nifty. Let's see what's in store for me. Now, moving on to what to expect in the coming week. Honestly speaking, this week I had less work to do because marking resistance and support levels on the charts was almost similar to that of last week. Talking about Nifty first, on the weekly charts, resistance is at 24,600 followed by 25,000, 25,150 zone. First support is at the past of 2 weeks low of 23,800 and then at 23,550. On the daily time frame, immediate resistance stands at 24,600, which coincides with the 100 EMA, followed by 25,000 and 25,150 zone consistently with the weekly view. For support, we are looking at 23,800 and then 23,550, again the same as weekly levels. Now, I feel since we are 5 days away from the expiry, the straddle premium may not be the right metric to gauge the range until the next weekly expiry. So instead of gauging the weekly expiry range, I will just present the data and tell you that the ATM straddle right now is priced at 364 points, and that is super low by any standards, especially given that we have a 3-day holiday ahead. Now, overall bias for Nifty in terms of direction is still sideways to bearish, but Thursday's sharp up move may imply something. We shall find it out in the coming week. Moving to SENSEX and what to expect in the coming week. Well, on the weekly chart, the immediate resistance is at the 78,550 and 78,600 zone, followed by a major resistance zone between 80,650 and 81,150. On the support side, the levels remain the same as the last week. We are looking at 75,900 followed by 72,700 to 72,500 area. Switching to the daily chart, resistance is located at the 78,000 and then 79,400 levels. The next resistance zone is at the 80,650 and 81,150 zone. On the downside, supports are placed at 75,850 and 74,700. Just like Nifty, the overall bias for Sensex also remains sideways to bearish, but Sensex sits right at the support, so that's the key level to watch out for. Talking about Bank Nifty's expectation for the coming week, well, on the weekly chart, support and resistance levels remain the same as the last 2 weeks. The 57,100, 57,700 zone is where the resistance sits. Support is at 54,350 and then further down at 51,300. Looking at the daily time frame, the 55,900 and 56,000 zone remains the immediate resistance, followed by 57,500 to 57,700. On the support side, the key levels to watch are 54,350 followed by 52,800. The short-term bias for Nifty and Mid-Cap Nifty is positive, while Mid-Cap Nifty's medium-term bias remains positive. For Sensex and Bank Nifty, both the short-term and medium-term biases are negative. Nothing much to read here, I think it's just another muted week. Moving on to India VIX, well, India VIX dropped 6.35% to close at 18.46. With so much volatility, the VIX dropping makes little sense. But like many things in life, not everything has to make sense. Moving on the sectoral front, we are continuing to track the TJIs, that is Tijori Indexes. As I shared last week, it's a far more granular set of indexes and there are close to 82 of them. And therefore, it's much easier to find pockets of outperformers in the broader market, especially if you are looking at stock picking. Now, this week's top performing indexes are Alkali Chemicals, Transformers, Upstream, QSR, and Plywood. Among these, Transformers and Upstream clearly lead the pack as they are currently trading at all-time highs. However, we need to be a bit more selective with others. While they have gained solid momentum over the last month, they are still a significant distance from their previous peaks. Now, talking specifically about Upstream, if you are new to the oil and gas world, you see there are these 3 categories in oil and gas: upstream, midstream, and downstream. Upstream is all about finding and extracting oil, midstream is about transportation, and downstream is finally converting crude oil into more usable alternatives through refining. So usually when in an oil crisis, it's the upstream which benefits the most. Now, this is my basic understanding of the mechanics. I'm sure some of you know much more than this, and feel free to add that in the comments. Talking about crude oil, I have an interesting read for you about the second order effects of this oil crisis later in the episode. Okay, back to the Tijori Indexes. Now, it's also interesting to see sectors from a perspective of how close they are from their 52-week high. This view becomes especially useful when the larger and the broader indexes are themselves in a drawdown. So here again, we have some overlaps in terms of Transformers and Upstream. The rest are different, which are defense, refractories, and yarn. As I said last week, it's a great idea to look at these sectors and double-click on them to understand the stocks which are leading within these indexes and then take a call accordingly. Moving on to commodities, well, commodities this week are very similar to how last week looked. We have precious metals like gold and silver which are in red to flat. Copper is also flat. Crude oil is a standout this week with a 15% spike, which is obvious. We just spoke about Brent crude trading at about $100. Natural gas continues to move downwards, which I've always said is its inherent character. That's all in commodities this week, and in summary, markets paused this week after a recent recovery. With indexes largely flat and directionless, the uptrend has clearly slowed down, shifting the tone to consolidation. Nifty and Sensex are hovering around key moving averages, showing indecision, while Bank Nifty underperformed and looks weaker. Mid-Cap Nifty, on the other hand, continues to hold relative strength. Volatility remained high despite a dip in VIX, with sharp intraday swings signaling a shift from trending to choppy conditions. Sectoral strength is still selective, with pockets like Transformers and Upstream holding near 52-week highs. Overall, the setup is sideways with a slight bearish tilt as the markets head into a new month. Well, moving on to what caught my attention this week, well, I've got two interesting recommendations for you for your long weekend. One to read and one to watch. The first is last week's column by economist Ajay Shah titled "It's Not Your 70s Oil Shock." As the name suggests, the piece dissects the differences between the historic 1970 energy crisis and our current landscape. What I found particularly interesting was Ajay's analysis of the second-order effects, especially for India. It's a short and a good read. Next is an interview with the legendary Thomas Peterffy, who has been a pioneer in the electronic trading space and is also the founder of Interactive Brokers. This is one of those odd lots podcasts on video. Peterffy in this interview dives into everything from insider trading, the impact of AI, all the way to the future of prediction markets. Absolutely an interesting watch if you are interested in finance, markets, broking, you name it. As always, you'll find all the links in the show notes. Now over to the events to factor in for the coming week. Well, 4th of May, Monday is the Assembly election result day. Other than that, there are no major known events lined up for the coming week. With that, we wrap up this week's weekly market metrics, and if you find this series useful, don't forget to subscribe to the channel, and yes, do share it with your friends. Until then, stay curious, stay steady, and enjoy your long weekend.